Good evening, everybody. This is Dennis Wilburn. Welcome to the Art and Science of Active Trend Trading update for September 23rd. It's Sunday, September 23rd. We're getting ready to go into the final week of September 2018. I'm Dennis Wilburn, founder of Active Trend Trading. I always love putting out these Art and Science of Active Trend Trading updates for both premium members and just my personal guest, of those who get the personal invite to just watch this video. This is one of our free videos that we do each week. We do two of them. We actually do this one, and we also do a webinar on Friday called How to Make Money Trading Stocks, Options, and ETFs. Hopefully in 2019, we'll be adding to that how to make money trading stocks, option, ETFs, and futures. If you're looking at learning how to trade futures, I'm not talking about day trading futures. I'm talking about swing trading, which is a completely different concept. And that's some of the new things we have coming down for active trend trading moving into next year. All materials presented are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. The motto of active trend trading is to clarify, simplify, so each one of us can multiply our capital and multiply the cash flow that we currently have going on. That's my pledge, what I seek to do as the founder and basically the lead technical analyst for active trend trading. This is the Art of Active Trend Trading update. It's basically a weekly video to accompany the newsletter. It basically is the body of the newsletter. Take a look at some market technicals for potential trade setups, bonus trades. Now, what's unique is a lot of services, they basically, you have to become a premium member to get any, trade setups or notification on trade setup. Active Trend Trading, I want, basically, my desire is for people who are still working for a living to basically have some good basic training on how to trade the markets. And so part of what I do is if I want to provide at least around one setup per month, or at least 10 per year. And so that's what I look to do. The other thing we'll talk about a little bit today is the other market driving events. And then I do a real quick mechanical tips section at the end. So for the update for today, earnings are just about over, getting ready to go into earnings at the end of the year. So not a lot of earnings setups. I'll talk about a couple of bonus setups. For premium members, of course, you will have already gotten your setups, from last week, and also a setup that we just placed today. If you are a BAM, a Bay Area Moneymaker member who is current with your monthly membership dues, you also will receive an additional bonus trade setup, and we covered that at Saturday's meeting on how specifically to make a trade. And that trade is going to be happening with TNA, the 3-time leverage ETF for IWM. And then a tech tip today, moving average bounces. Worth waiting for? Why? We'll cover that briefly here. So we're going to cover it right now. Here's a chart that I laid out a couple of weeks ago, and it's still valid. This is a weekly chart of LABU. LABU is a 3-time leverage ETF of the biotechs. And what I want to highlight very quickly is the places to be kind of aware of what's going on with LABU is when it approaches its moving average. Now, this is a weekly chart, so this dark brown line is the 40-period moving average, 40-week moving average, which corresponds to approximately the 200-day moving average. As we can see, whenever price action retreats down to the moving averages, it would tend to bounce or bounce back up through. So the thing I'll be talking about, so what makes that so powerful? How can we use that to plan our trades? As we see, as price action started to reverse in the early part of 2017, it got back above the 40-week moving average and more or less held that for several weeks. And it made a run all the way down here from about $45 up to as high as $110. Guys, that's 100% return. That's 100% return from here up to here. Now, I'm not one to say, hey, we're going to capture all of that. No, but there were opportunities to trade all the way up on these little bounces off the moving averages. Matter of fact, if somebody would just capture a few of those, let's see what would happen. Well, where? Here, it ran 79% in 9 weeks, 84% in 9 weeks, 66% in 7 weeks, 89% in 9 weeks. Is there a theme going on here with 9 weeks? We'll cover that in a future tech tip or tech talk for active trend trading. And then 8 weeks, 65%. But this is over a 2-year period, approximately 2-year period. And this is what we watch, the entities that we watch with active trend traders all do this, not exact, but all provide the opportunity for these kind of potential moves. So wait for the winners. This one had 5 runs in 2 years that I counted, and an average move of 76%. Those people that are just basically, if they could, a 76% run would be, they would just go, wow, how did that happen? Because they've accepted old ways of thinking that, well, if I can just make 8% per year, I'm going to be doing well. I think with a good, strong trend trading system, up the game. Let's look at 15, 20, 25, 30% as a target. My objective for active trend trading is 40%. So let's move along here. One of the things I always, on the web page you find this video. There will be 3 watch lists that I put together on Friday, Saturday, that highlights a couple of different things. One is I basically take the IBD 50 that comes out, twice a week, and the one that comes out on the weekend is I do a sort on that to find out which of the stocks have the strongest fundamentals on the IBD 50 list, and then I post that. That's one of the watch lists you can get a hold of. Secondly, then, I also track every stock that's been on the IBD 50 since the beginning of the year. So I have a fundamental strength, strong, we'll just call it a fun watch list. The 2 is the running, and it's every stock that has been on the IBD 50 since the beginning of the year. We're up to about 160, 170 stocks on there so far. But that makes a great place to go and search for potential new movers. And because with the thousands and thousands and thousands of stocks that are out there, this can help isolate it down to just a few, therefore saving you time and effort. And then the last thing I pulled together is what's called the composite list. And this is the one for for September 23rd. And what this does is this basically goes through and I highlight all the stocks on all 13 premium IBD lists. I find out how many showed up on multiple lists. Like, here we go, ALSN showed up on 6 lists. And what that can often mean is that the more lists something shows up on, the heighten the interest by potential buyers, such as the institution. So that was my number 1 pick. 2 showed up on 6 lists. FT&T, you'll recognize some of these. MasterCard, Visa, Vive, and Paycom, Palo Alto Networks. You'll recognize some of these just, and they've been bouncing on this list for several weeks now. So just by paying attention, this sorts it down, all these big multiple 500, 600 entity list to something that's much more manageable. And I always I kind of stop it if they showed up on 5 lists. I don't, but in the watch list that I actually post for this, it has all the stocks that show up on at least 2 lists. And so by simply registering for the actual free newsletter, you'll get access to that free list. So what else we got going on here? Okay, something I want to keep an eye on, guys. Oil. Those of you who have been, playing in oil, we've done really, really well here recently. However, what's oil doing? Oil is moving into what tends to be its seasonality in the October timeframe, and it looks like it tends to want to sell off going into December, January, February, and then we repeat the cycle. Now, this is a seasonality chart. It does not, the actual chart of oil does not necessarily look like this, but what tends to happen is this tends to be the time of year, and it's on a swivel here, somewhere between plus or minus 4 weeks. Either side of that top is when oil will tend to want to sell off. Same thing here on the bottom. Sometime around the February timeframe, start to get your pull up, go sideways, and a push back up. This is the summer driving season. Again, February, plus or minus 4 weeks. So that puts us back to middle of January, middle of March, when we should see this. And so I track this for our premium members. What's another one that's really good is one Russell. And I'm just really honed in right now. Russell, in October, tends to hit its low after a weak September, and then make a nice run into the holidays. This is, some people call this the Santa Claus rally, or it's just the tendency to, hey, people start buying it back up, lull in January, and then continue on February through the end of April. And so by being aware of when the market tends to catch a bid, we can position ourselves to at least be in the market where it has a tendency to be moving in the upward direction. So let's talk real quickly about moving averages. Bounces worth waiting for. Why? Well, one of the reasons why is the moving averages. Now, and there's multiple. I primarily like to focus on the 8, 20, 34, 50, 200, 100, and 200. The moving averages themselves provide an excellent objective level to take action. I tend to plan my entry trades. I like to plan my entry trades off of the 8 or the 20. I like to plan my exit trades, okay, as I get extended away from the 820 or when things break back down below the 820. You probably hear that alert going off. Something's going on. Let me check it out really quick. I don't know what is going on. Okay, a little bit of excitement. Let me see this. Hold on just a second. Okay, looks like gold futures are going up a little bit out of sell-off. Okay, so it provides a great place. And so, in other words, it's very, very definable. And that's one of the things in trading. The more objective we can be, the less we get impacted by variables that are more or less subjective. Okay, because we can objectify the levels we want to take action at, they also put us closer to our stops. Therefore, that improves our risk reward. So in other words, if I delay my entry trigger and entry price until a place where I'm closer to where I will actually potentially stop out, that will assure that I'm, one, not chasing prices, and or I'm wanting the prices to come to me, and I'm taking action where I've defined where I should take action at due to my technical analysis, and I'm not chasing. So that's kind of the basic. Are the bounces worth waiting for? In my book, yes, they are. And oftentimes the moving averages, the 820, and sometimes even a 3450, and the lower ones, can define your support levels on your pullbacks. So let's take a look at a couple of charts. If you're trying to get a hold of me, here's my email, dww@activetrendtrading.com. As always, trade wisely, trade profitably, stay on target. And that's me A couple of weeks ago up in Boise, Idaho. My son is an archer, and he took me down to the range to see if I could find a target. And the fact of the matter is the old man did find a target, but boy, have they improved bows from when I was a kid shooting bow and arrows. They've got to actually aim things where you can aim at the target and actually hit it. So, hey, let's take a look at a couple of charts here before we run away. Okay. A couple of I'm going to throw out a list of stocks that you may or may not want to put on your watch list that have kind of moved their way onto my Grub. Grub is doing a nice little pullback. Let's see if we can get a pullback all the way to the 50. But as you can see, it's given us our healthy pullback. Why is a healthy pullback important this time of year? Well, for one major reason is, that some of these growth stocks, they'll pull back into the early October, mid-October timeframe, and then rebound as the institutions start to reinvest at them going into the end of the year. So Grub, I like. MTCH, I like. Again, what's it doing? It's doing a pullback. Here was the move from here to here. This is the Fibonacci. It has reached the 50 period moving average, and isn't it quite interesting? It came almost to the penny. 50-day moving, or the 50% retracement was at 54.90. What was its low that day? 54.89. Amazing how these Fibonacci's can work. Where would my planned potential entry on this? Look for a bounce off the 20 or a bounce off of here. If things continue as a continued pullback, I really like the 52.75 level. And by that time, the 34-day moving average may have crept up and can be our support moving average trigger. ABMD. Again, getting a nice little kind of sideways, kind of a huge pennant going on, or triangle going on, as you can see on the weekly chart. Wide moves on this puppy, though, all the way from approximately 344 up to, so it's about $100 move. And if this breaks out the top side, that would give us a move of, let's see, anticipate move about $91. That would be from the breakout point. Say, okay, some of the other ones I like going in this week, FTNT, TNT. Again, give it a nice little pullback. As you can see, what has that done on past pullbacks? Well, it basically has pulled back to a level of support around the, guess what, moving averages. And did a bounce from there. Looks like it's not quite ready to bounce yet. TSI weekly charts looking at bearish engulfing on the weekly are saying, hey, you know what? I may want to go a little bit deeper in this retracement, but my trend is still up. LGMD. Again, TSI weeklies turning over. However, it looks like a really nice flag, nice area to bounce off of the 20-day moving average. May slip down to the 250 level, but we'll keep our eye on that one. MEDP, MEDP, MedPlace. Again, I don't really like this one because it's not uniform. That was a big sell-off day. And so I'm looking at MEDP potentially for some more downside. And where's it likely to go? Well, you got a good trigger down here at the 50 or even below that. Again, this is really, this looks like it was a fairly new entity and it took off. However, it ran up over 100%. And now it looks like it wants to do a stronger pullback. Support 46.21, next support 40. And then the next support after that, probably about 33. So we're going to make it down to that side. No idea. Panera Bread, not Panera Bread, Palo Alto Network, sorry about that. Nice pullback daily chart. Moving back into the moving averages. Has not provided us a really good reversal signal yet. TSI on the dailies is at support. But again, it's looking like negative divergence here on a weekly. May provide a deeper pullback. Where's an idea place? I like 220, 218 for a potential pullback for the flag. And team. Again, team is holding nicely here at the 89 level as it is working up its oversold condition on a weekly chart. We'll see if it does hold. Where's the next stronger area? 85, 80 to 85. So I would put either an alert there, because look what's coming up. The 34-day moving average right there at 85. That looks, that looks pretty good. Now, I may not even make it down there, but watch for candlestick reversals and TSI moving in the positive tick ups. And last but not least, Paycom. It too, very short and sweet pullback into the 20-day moving average. It is held there. Will it continue to fall? TSI weekly chart looks like it wants to roll over and do more of a pullback. Where might it go? Well, it's got really, well, it's already at support at 150-ish, 139, 140. And what it do, here's, and I'll just show this as a very good example. What oftentimes happens with, while TSI is a great indicator, especially when you're getting a bounce off the bottom support levels. However, just because TSI has turned over on the weekly or on any of the time periods doesn't mean that the trajectory doesn't, start going down. It oftentimes means it slows down a little bit, as we see here, until it's worked off its overbought condition. Find support at the plus 25 level, which we know that happens quite often. Plus 25. 0, minus 25, and of course the extremes, plus 42, minus 42. Those are where the TSI tends to find support resistance. So those are the ones we're looking at going into next week. Again, premium members I encourage anyone who's listening who wants to become a premium member, let me know. Send me an email. We've got some price increases going on at the end of the year. And just to let you know, once a person becomes a premium member, as long as their membership stays active, their prices never go up. And so we still have people who are members who started off with us, 4 or 5 years ago, and they're still, they still have the benefit of a membership that was how we priced it back then. So anyway, until later, remember, stay on target. And God bless everybody. Aloha.